For decades, China has been the world's economic powerhouse, lifting millions out of poverty and driving global growth. But today, the world's second-largest economy is slowing down. Is China facing a recession? And if so, what does it mean for the global economy? Let's dive in. In 2023, China set a modest growth target of 5%. But as of early 2025, that number appears increasingly out of reach. Some experts predict growth could fall to as low as 3.5% this year. But why is this happening? One of the biggest contributors to China's slowdown is the real estate sector. Property giants like Evergrande and Country Garden have defaulted on massive debts. The result? A housing market crash wiping out an estimated $18 trillion in household wealth. This crisis is even larger than the losses seen in the 2008 U.S. financial meltdown. With falling property values, fewer people are willing to invest in real estate. Construction has stalled, unemployment is rising, and a debt overhang threatens the entire banking system. A major warning sign for any economy is deflation, a sustained drop in prices. In China, consumer prices have fallen for multiple months in a row, indicating weak demand. Consumers are saving instead of spending. Businesses are cutting prices just to stay afloat. And when people stop spending, economic activity grinds to a halt. China's young workforce is in crisis. Over 20% of young people are unemployed, the highest level in recent history. The government even stopped reporting this data in 2024, raising concerns that the real figures might be much worse. China is the world's largest trading nation, but global trade flows are changing. The US, Europe, and India are actively reducing their reliance on Chinese manufacturing, a trend known as risking. Countries are diversifying supply chains to avoid overdependence on China. China's exports are falling. In the last quarter alone, exports to the US declined by over 12%, affecting industries from electronics to textiles. In early 2025, President Trump imposed a new round of tariffs on Chinese imports, triggering retaliatory tariffs from China. The tit-for-tat battle is once again heating up, and the global economy is feeling the pressure. Tariffs make goods more expensive for consumers and businesses alike. This could lead to higher inflation in the US and disrupt industries that depend on cheap Chinese imports. China's workforce is shrinking. The country is aging rapidly, and birth rates are at historic lows. By the year 2050, China will have 300 million elderly citizens, putting enormous pressure on social services and economic productivity. Global markets are reacting to China's slowdown. Investors fear that a prolonged economic slump could lead to global stagflation. Companies with high exposure to China, such as Apple, Tesla, and major commodity firms, are already seeing declines in their stock prices. China accounts for nearly 30% of global economic growth. If China slows down, the entire world feels the impact. Energy demand is falling, causing oil prices to drop. Emerging markets that export raw materials to China are suffering. European luxury brands which rely on Chinese consumers are reporting weak sales. Scenario 1. The slow recovery. China implements stimulus measures but growth remains weak. Global markets adjust to lower Chinese demand. Scenario 2. A financial crisis. The real estate bubble bursts further, leading to a full-blown banking crisis, requiring government intervention. Scenario 3. A policy-driven rebound. Beijing aggressively cuts interest rates and increases infrastructure spending, sparking a temporary recovery. For investors, diversification is key. The slowdown in China means looking at alternative growth markets like India, Southeast Asia, and Latin America. Businesses should prepare for continued trade disruptions and consider reshoring or diversifying supply chains. As China's economy slows, the global economic order is shifting. We may be entering a new era where economic power is more distributed across multiple nations, rather than dominated by one superpower. If you found this analysis insightful, subscribe to the Economic Fallout for more deep dives into global financial crises. Let us know in the comments, how do you think China's slowdown will impact the world? Protect your wealth, protect your family, stay prepared. This is Paul for the Economic Fallout.